Hey, happy Friday, everybody. Thanks for tuning in to Mark's 10 at 10, where I break down all of the happenings in a very succinct form for you guys to digest what's going on in the housing market today. So, this week, kind of a slow week. The biggest news probably was the jobs report came out. Actually, the biggest news was probably the debt ceiling was raised. So that thing is now behind us. All the politics with that is probably put on hold for the next few years. So that should bring some relief to the bond market, which is going to help mortgage rates. Now, what I want to talk to you guys about is not so much this job market, because all those is a lot of noisy numbers. There's conflicting numbers, and it just gets confusing. So what I do want to tell you about is something that all of us can understand. And it's this, is that currently, and Case-Shiller, which is a big company that does a lot of data monitoring and that sort of thing, they just said that home prices are on the rise. At the same time, you've got somewhere between 60 and 100,000 agents who have just left the market, real estate agents. So why is that happening? Well, the reason why it's happening is because the numbers are so far down. We're really, in terms of transactions, guys, somewhere around the 2008 numbers. So I know a lot of you guys who are listeners maybe weren't even home buyer age at that time. But what I want to tell you is in 2008, we had about 4 million total transactions in the entire country. This year, we're on track to do about 4.2 million. That's it. So that is like a near record low. The biggest issue is this demand. This pent-up demand is all brought on by a few different things. Number one, you have more 33-year-olds entering the market in history than ever before. At the same time, 98% of those people want to buy a home. So you have this tsunami of buyers coming into the market at a time where inventory is at its lowest in history. So May was the lowest inventory in recorded history. So we have this pie that's shrinking. So everybody's trying to get a piece of this pie, right? And the pie is shrinking. And a lot of that has to do also, guys, with the whole anomaly with rates being so low during COVID and during that period of time where they dip down. You've got people with 3% rates that right now, that some of them literally hate their house. They want to move. They can't move. They don't want to move because the economics just don't work. So what's going to happen is, let's shift to the good news. What is the Fed doing, as I've been trying to explain in some of these talks, is that the Fed is affecting short-term rates. They're trying to push the brakes on the economy that was barreling down the train tracks too fast, which was causing inflation. Higher prices, lower rates was causing higher prices. This type of thing is what causes inflation. Well, now what they're trying to do is slow things down and really trying to cause a recession. Well, the jobs report keeps coming out conflicting, and it looks like we're finally maybe getting some data where they can start to push pause on raising short-term rates and agree that some of these numbers that are coming out are bad for the job market, and start to see mortgage rates respond. Because remember, it's kind of confusing, but mortgage rates respond to what's going on with inflation. Well, the Fed is trying to affect inflation. So the Fed does have an indirect relationship with mortgage rates, but it's not a direct relationship. It's important to understand that. So this is the reason why there's so much talk about it, because there's this lag of really the mortgage rates are what most of us, you and I, the people that are homeowners are worried about the most. We can talk about on another segment about what's going on with commercial lending and the problems that are having with banks having renewals on those loans. But what I want to focus on, because this is my audience, is my people want to know what's going on in housing. Well, as inflation comes down, mortgage rates will follow. So we are close to the bottom, meaning that we should start seeing inflation numbers start to rise. So, or start to lower rather. So as these numbers get lower, then the bond market traders are going to feel safer about buying bonds, trading mortgage-backed securities, which will help mortgage rates. Long story short, inflation comes down, mortgage rates will follow. Now, what does that mean for the housing market? That means that this massive amount of borrowers that are going to come into the market are going to be coming in at the same time when the pie is even smaller. So what do you think that is going to do to prices? Well, I can tell you what I think. I think historically what has shown us is that anytime you have a very small amount of inventory of anything in economics and a much larger pool of buyers trying to fight for those products, in this case, a home, well, you're going to see prices stabilize. You're going to see prices start to rise. And this is that inverse relationship that we talked about. When rates go down, home prices go up. So as you've noticed, right now, we've even got an anomaly going on where prices have ticked up a little bit, and we still have rates have ticked up a little bit. Mortgage rates have ticked up a little bit in the last week or so, and we still have prices going up. So that is all brought on by the pressure of the lack of inventory. So when you have these millions upon millions of people that are turning 33 years old, the largest number of people turning 33 years old in the history of the world, then that is a huge thing when 98% of those folks want to buy a home. So what is it's interesting that age 33, just so you know, that is the peak year when millennials or when individuals will start to enter the housing market. So guys, there is hope on the horizon. The folks that are looking to purchase a home now, that are maybe looking to buy a home, there's also, there's different products out there that are available right now with crowdfunding. If you guys have ever wondered to know about, in a wedding situation, a wedding gift can be a down payment for a new home. You do that with this crowdfunding platform called Home Fundit. So it's a very cool platform for people to be able to share a link to invite their family to contribute $50 instead of maybe buying a toaster, and that goes into a fund, and then you can earn up to $2,000 with a match down payment for every $2 for every $1 received gets a bonus dollars when you share this. So CMG as a company will give you up to $2,000 as a match. And so when you pull all that together, these are the ways that people are starting to win as first-time buyers, and maybe getting a buy down on an interest rate kicked in from the seller. So be strong, be confident out there, and let us know how we can help. If you want to run some numbers, my team and I are here to help you. And I hope you have a great week and a great weekend. Talk to you soon.